If you think that the massive pain of real estate investing is happening right now, I've got a huge surprise for you. It already passed. We are in the place where it is the best time to invest. We're going to explain this all to you on today's episode of Purpose-Driven Passive Profits. If this is your first time joining us, his name is Nate Armstrong. He is the CEO and founder of Home Invest, more than 20 years in the real estate industry, an Inc. 500 company. My name's Steve Warner. I'm the Chief Investment Officer, and we are here to share some knowledge with you because we want you to make passive investments that are safe, secure, ultimately being a good steward of your money. We follow the Matthew 25 principle. That is the parable of the talents. This is Purpose-Driven Passive Profits. Nate, talk to us about the multifamily meltdown. What is going on right now?
Yeah. So what happened, there's a big national news article about this, about someone that bought a multifamily property using some other investors' money, and they didn't anticipate interest rates going up. They didn't anticipate insurance going up and taxes. And so they ended up losing the property to foreclosure. And it caught a lot of buzz because the Wall Street Journal published it front page. And anyways, it made everybody think like, oh my goodness, is there a meltdown happening? Here's the thing. The meltdown already happened. That deal was taken 3 years ago. And the reason that they're seeing the pain happen right now is because interest rates went up. But those decisions that they made 3 years ago to not anticipate that interest rates might rise, to not anticipate that taxes might go up and insurance might go up. So their decisions actually were just basically bad decisions made 3 years ago. And instead, right now is actually one of the best times to get in because there's sellers like that are selling to us right now. People that took decisions short-sighted on which money or which debt structure they should take, like how many years should they lock their interest rate. Those people are coming to us right now saying, you know what, my loan's expiring. Can you sell? Can you buy from me? I'm in a spot to sell. So it's actually the opposite. Everybody thinks like, oh my goodness, it might be meltdown time. No, the meltdown already happened.
If you guys can get your head around that, the news is talking about it right now because it grabs attention, right? That's what everybody's talking about, recession, all the things going on. So if this happened a few years ago, Nate, what makes right now the right time to buy? Like, why is right now the right time to get into a real estate investment?
Yeah, because we get to use today's economic factors. So here's what we got going for us. Interest rates are high. When you apply a high interest rate to an asset, you get to buy it cheaper. You simply go to the seller and you say, hey, Mr. Seller or Mrs. Seller, I understand you want XYZ price, but when I run the numbers with today's interest rates, the only thing that makes sense is if I buy it substantially below what you're asking. And so there's justification in the marketplace because of these high interest rates, because of the increased taxes, the increased insurance. And now if we buy it today with today's interest rate, and then 5 years from now, interest rates happen to come down, which historically speaking, they typically do, then we can go in and refinance it and we can create more cash flow for our investors.
So that's the key with the interest rate. What's the other thing that's going on with this multifamily meltdown that makes right now a great time to invest?
Yeah. So I want to talk on this one for a second, Steve, about like timing of the market. A lot of people will think like, oh my goodness, like, do I have to wait until we, go through a correction? The folks that play the correction game or the timing the market game, they have to get it right twice. And so usually they miss. What I mean by that is that not only do they have to predict when bottom is actually bottom, but they also have to predict when the top is actually the top. And to do that twice is like getting struck by lightning twice. Like the odds of that actually happening are slim to none. And so instead, what you do is you look for good, solid cash flowing deals that you can get into today. And then over the long haul, just expect that thing to do what it normally does. Like we looked at the 40-year history of rents on a previous episode. I'll pop that up for anyone that's following us on video, and anyone that's listening just through audio. I'm displaying a chart right here of rents since 1940. This is from the St. Louis Reserve. And they're basically showing all the rents across the country. And nowhere on here is there a dip in rents. Zero. It's happened 0 times in history. They flatlined during the Great Recession, 2008 through 2012 era. They flatlined, but since then they've gone up. Now, I know that there's been a couple of cities that went up a little bit too fast and they had to cool off a little bit, but for the most part, rents typically tick up.
That's the thing that I want you guys to get if you're listening to this. Even though we're paying a higher interest rate, we're still buying a deal that makes sense and makes solid returns right now. So when the rate drops, it could be 2 years, it could be 3 years, it could be 5 years, but eventually the rate is going to drop. If you even look back at the beginning of the 80s, right? Nate, you're a student of history. In the 80s, we saw a right around what we're seeing right now, right? Interest rates got up to like 10, 13, 14%. 10 years later, they were right back down. And anyone who bought a property that made sense at that high interest rate, the minute rates were 7% and then 5% and then 3%, they made out like crazy. They got to refinance, their payment went way down, and they got the equity. That's why it makes sense. If you can do it when it's hard, this is the other way I guess I like to think about it. If you do it when it's hard, when things are easy, it's real easy. Like you end up making out really, really well. So we talked about the interest rates and we talked about what's going on with rents. Is there anything else people should think about right now? Hearing the multifamily meltdown in the news, is there a reason that actually means that it's a good reason to invest right now?
Yeah, the pressure point for some of the sellers that have to sell right now, we lightly touched on this, but it's insurance rates. Insurance rates, because of the hurricane last fall, insurance rates have gone up a lot. And so owners of buildings right now, when they're going for insurance renewals, sometimes that new insurance bill is a major sting, and it might be just enough sting to make them sell. So for us as opportunistic buyers, we can actually score good deals because of it. We come in and we say, hey, I know that you got this new bill here. We can pay for the property, but we're gonna have to pay a little bit less. Here's how much we can pay. And we're seeing sellers sell their property on that account.
It's awesome. It is a time to be an investor. If you guys would like to invest with us, you can go to homeinvest.com. I know you heard a promo at the beginning about one of our latest buildings that we are working on. We always have properties that are coming in and coming out. We're always doing investments. Right now, we're doing one about a rate of one new multifamily building per month, and that is moving faster. Our deals tend to close out really, really fast. Up to a 16% IRR, 1.8x multiple, where you put in 100,000 and you get 180 back out. Of course, none of that is guaranteed. It is investment, but we are talking about one of the best investments known to man, which is multifamily real estate. You can go to homeinvest.com to book a call with myself or Sue. We'd be happy to talk to you about the investments that we have right now. Nate, is there anything you have to say in closing?
Yeah, just follow Matthew 25, man. That means double your money, double it safely. And there's safe ways to do it. Just don't go hide it under a rock. Do something that's purpose driven, as we like to say here.
Absolutely. Right now, it takes some courage to invest, right? I actually talked to somebody same way. They were like, well, we've got 300,000 sitting in our bank account and we like seeing it there because we don't know what's going on. I said, well, did you have 300,000 in there 4 years ago? And I said, what happened to that money? Because inflation just crushed the value of cash. If they would have had that in an investment, that would have gone up at a multiple. And when I showed that to them, they were like, you're so right. So,
we'll have to do another episode on this, Steve, but they finally came to resolution on the debt ceiling. And how are they going to pay $4 trillion? Where do you think that's going to come from? It's not like sitting in the US Treasury. It's not just sitting there. They're going to print more money at some point. And so every time they print more money, it just deflates the current value. So when there's 300 grand in a savings account after printing $4 trillion, it's guaranteed that the value of that 300,000 will go down. So you put it into a hard asset, at least the hard asset chases inflation. It goes up with it. It rises with the inflation.
That is a cliffhanger for another episode. All right, guys. Go to homeinvest.com, jump on a call with us if you'd like to learn more. You can leave us a comment in the YouTube comments, or if you're listening to this on the podcast, feel free to email us. Till next time, remember, look for safe, secure investments. You want to invest with purpose so that you can live your dream, retire 10 to 15 years earlier, and serve God. We'll see you next time on Purpose-Driven Passive Profits. Thanks so much for listening to our show today. Here's Nate with our latest offering.
Oh, so I'm excited to announce this. We've got a 78 unit building multifamily property. It's 5 minutes from the Kentucky Derby. Its rents are presently 20% below market for renovated units. To learn more, all you need to do is go to homeinvest.com or click in the description below.